Good day, everyone, and welcome to the Premium Video Newsletter for Wednesday, August 7th, 2013. Starting with the fundamentals, today's news came from both the public and the private sector. Disappointing results from big companies and a slump in bank stocks increased further selling pressure on the broad stock market, putting major indexes on track for their third straight daily decline. Bank stocks were weaker in today's trading following news that the government accused Bank of America of civil fraud. In a separate lawsuit, the Justice Department and Securities and Exchange Commission said the country's second largest bank failed to tell investors about the risks involved in a 2008 sale of mortgage-backed bonds. Most of the selling pressure from yesterday and today is occurring as a result of speculation that the Feds will start cutting the stimuli program sooner than later. Federal Reserve Bank of Chicago President Charles Evans on Tuesday said he would not rule out a decision to begin reducing bond purchases in September. This comes after Monday's Federal Reserve Bank of Dallas President Richard Fisher's statement that the central bank is getting closer to tapering the current quantitative easing program. Currently, the Federal Reserve is buying a total of $85 billion worth of treasuries and mortgage-backed securities each month to keep the economy moving forward by keeping interest rates low and stock prices higher artificially. Technically, the broad market was mixed today, opening lower and gaining a bit of traction as the day went on. The next support level is at 1680 in the broad market, and I do believe unless tomorrow's announcement is extraordinary, we will drift towards that level within the next few days. I'm anticipating more selling simply because many sectors are weighting down the broad market. For example, the negative news in the banking sector today did not do any favors to the financial sector. Although the sector is pulling up towards the end of the trading day, there is still a substantial support line at the 2045 level that was broken. The semiconductor sector is also pushing lower and sitting at support levels that, if broken, can take the sector down to the 3750 level very quickly. The semiconductors have a very strong influence on the rest of the technology sector, and the broad market has dozens of tech stocks, which make up the S&P 500. So we do have to take this sector very seriously. Also, let's not forget the transports. I monitored this sector during important price levels, and today we made a lower low once again. And although we did rally during the day, it's not making me overly bullish on the overall stock market. Lastly, the small caps, which have surprisingly been ahead of the broad market, are also not giving off very bullish signals at this time. And while I do think we will drop from these levels, I do believe we will more likely than not see more range-bound trading action with a slight bias towards the downside. Unless this is a big unless, tomorrow's unemployment numbers are completely out of character, then we may see some volatility to the upside. The US dollar finally broke down below the 81.50 level as we've been anticipating for some time now. And I think we will reach our target within the next few weeks. As long as the U.S. economy has excessive uncertainty, and at this point it clearly does, we will not be able to sustain a meaningful rally in the dollar. The monetary policy is still very shaky right now, and the dollar will continue to soften till we see much needed stability. Keep in mind that tomorrow is a big day because we have unemployment numbers, and the Feds are watching these numbers very carefully to see if they should curb the stimuli program. So there's an extra sensitive factor that comes with the release of these numbers tomorrow. The US bond market, along with the dollar index and the broad stock market, are going to experience volatility tomorrow. So be prepared. And if you're short the bond market, either get out and be prepared to wait after the announcement to get back in. The bonds turned direction today, and we're very close to our resistance area to the upside. I'm very bearish on bonds long term, but in the short term, I would love for them to rally just so that I can short them at a higher level. I don't see them going much higher than the low 127 area. So if you have a light short position, I encourage you to wait it out because the bonds overreact compared to most markets and they can really strike a nerve. But if you look historically, they are range bound over 75% of the time. Until we get some real clarity in terms of the stimuli program, I'm not seeing any drastic move in this market in either direction. The British pound is sharply higher after the Bank of England raised their outlook for their economy for the rest of 2013. In addition, the Bank of England said they will keep interest rates at a record low until unemployment declines to 7% or lower. I've been anticipating higher prices for the pound in recent months, and my only concern was getting past the 154 level, which we did. The next level of resistance is right around the 156 level, and then we will see if we can muster enough strength to get us past the 157 level. If data from UK, especially unemployment data, keeps surprising us to the upside, we could see the pound reach the 157 level quicker than later. Joining the pound is the yen, which is also breaking out today. If you recall, I've been cautiously optimistic about the Japanese yen, and I felt if we can go just a bit higher, it would trigger buy signals from many traders and hedge funds. We saw that, and we also saw some more short covering today. We are now in a bullish phase, but we are not out of the woods just yet. Expect retracement back down to the base near the 101 level unless surprising fundamentals come out during the next few sessions, and I will keep you posted on that. We have a few setups today, but keep in mind that tomorrow we're going to see some volatility. So be prepared and lighten up your position till after the report tomorrow. Before I get into the specific setups, I do want to mention that I got over 40 reversals to the upside today, meaning stocks that gap down and open near the bottom but close near the top of their range. This is usually followed by a higher opening the next day, not always but very frequently. One tail gap that we have to the upside is Bank of America. I would watch this one carefully because it came back today from very bearish fundamentals and closed near the high of the day. It's a lower price stock than what I usually look for, but it's an interesting tail gap to the upside that's moving against the fundamentals strongly, which is a very bullish indication. The second and final setup we have is an inside day, which is our lowest risk trade. The ticker symbol is ELLI, and it's one of our Fannie Mae companies. The inside day is 3 consecutive days that are inside of the previous day. The tight pattern resembles a triangle pattern. Enter a long 15 cents above today's high, and if filled, enter a sell on a stop 15 cents below today's low. That's it for today's tutorial. I will update you tomorrow after the report comes out, and earlier if I see something unexpected happening. Have a great night, everyone.